Good morning, everyone, and thank you for joining this webinar about what's new for employers for the tax year 2025 to 2026. My name is Vanette, and I'll be co-presenting the webinar today with Nicholas. The webinar will last for around an hour. The information you'll be receiving today is correct at the time of delivery, and today's date is the 19th of March 2025. Guidance is updated regularly, so we advise you to refer to gov.uk for regular updates. So I'll start by explaining how to use the control panel and ask questions. If you're watching on a PC, laptop or Mac, you'll have a control panel like the one on the screen now. Near the top of the control panel in the audio box, you'll see the red muted message. Everyone's microphone is muted so that you can hear the presenters clearly. And you can adjust the sound from this audio box. There is a message at the top right-hand side of the screen for anyone who can't hear me. You can usually fix audio problems if you select the phone call button, then make sure you go back and select the computer audio button again. If this doesn't solve the problem, then close the webinar and log back in. Halfway down the control panel, there is a handouts box. The handouts will include links to the information being covered in the webinar today. You can download these during the webinar. They are in two formats, Word and PDF. So please download in whichever format you prefer. There is a question and answer box near the bottom of the panel. Type your question in the box and then send. You can make the question box bigger by selecting the symbol at the top right of the question box, and you can then resize the box. Before you leave the webinar, you can choose to save the question and answer log. For PC or laptop users, on the control panel, select File at the top left-hand corner of the control panel and then Save Questions log. For Mac users, on the GoToMeeting toolbar, select File and Save Message log. I will show you this again at the end of the webinar. A link to a recording of the webinar, plus useful links, will be sent by email to you within a couple of days. If you're joining us on a phone or tablet, you may see a toolbar instead of the control panel. In that case, tap on the question mark to ask a question. You should take a screenshot to save answers. We suggest you do this as you go along, as you will not be able to save the question and answer log on a mobile device. Tap on the document icon to download the handouts. The icon should already have appeared, as the handouts are available for you to download. If you are unable to download the handouts, the links will be included in the follow-up email you will receive in a few days. We have colleagues in the background answering your questions during the webinar using the control panel question and answer box. They will aim to answer as many of your questions as they can today, but may not be able to reply to them all. Please note that we are unable to answer questions specific to individual circumstances. So for that reason, can we ask that you don't post any personal information in the question box? And finally, if we have any groups of attendees today, could I ask you to use the question box to tell us how many additional people are taking part? For example, if there are 3 of you taking part as a group, then please type 2 in the question box. Okay, thank you so much for that additional information. During the webinar, we'll give you an overview of the main changes that may affect the way you deal with employee and payroll matters. We're going to look at the following: income tax, the basic personal allowance and the rates for the new tax year, national insurance contributions, the rates and thresholds for Class 1 national insurance. This will include important information about changes to employers' national insurance and employment allowance, expenses and benefits for employees, fuel benefits charges for company cars, vans and fuel, national living and national minimum wage rates, statutory payments, the new rates, and the change to the amount to be recovered. We'll also provide some information about the new statutory neonatal care pay. We'll look at student loans. We'll look at other changes and updates, including national insurance for those of you who are self-employed, expanding the cash basis period reform, and VAT. But at this point now, let's have a look at the first polling question for today. This is where you can take part in the webinar by selecting one of a choice of answers. No one else can see your individual reply, but we'll all be able to see the overall result as a percentage of the total replies. I'll show you this on the screen after the poll has closed. Your answers are useful feedback for us, so please get involved if you can. And I will launch that first question on screen for you now. And that question is, how long have you been employing people for? So please select one from less than 1 year, 1 to 3 years, or more than 3 years. Okay, thank you so much for everyone for taking part in the poll. I'm now going to close it and then share the results. And those results are now shown on the screen. Okay, I'm now going to hide that information and I'll continue. So we'll start with income tax. The basic personal or tax-free allowance remains at £12,570 for the tax year 2025 to 2026. So the tax code for emergency use continues to be 1257L. HMRC may also issue individual tax codes for certain employees for the new tax year. You can find out what to do for employees both with and without a tax code by checking Form P9X. And you'll find a link in the handouts. These income tax bands and rates for England and Northern Ireland for the new tax year remain unchanged as shown. The personal allowance and the basic rate limit will be fixed at their current levels up to and including the 2027 to 2028 tax year. After the personal allowance of £12,570, tax is then charged at basic rate 20% up to £37,700 Then higher rate, 40%, from £37,701 to £125,140. And finally, additional rate, 45%, above £125,140. The income tax additional rate threshold, the income level at which an individual will not have any personal allowance, is £125,140. £1 of the personal allowance is withdrawn for every £2 of income tax above £100,000 from the 6th of April 2025. The Welsh income tax rate will remain at 10 pence for the 2025 to 2026 tax year, so that Welsh taxpayers will continue to pay the same as their English and Northern Irish counterparts. Your employees will pay the Welsh rates if they live in Wales. HMRC will add a C to the start of their tax code so that you deduct the right rates. The Scottish rates and thresholds for employees living in Scotland have an S prefix at the start of their tax code. The Scottish Government has announced a few changes to Scottish income tax rates from the 6th of April 2025. The rates and bands are based on the UK personal allowance in 2025 to 2026, which remains at £12,570. The starter, basic and intermediate thresholds have increased as follows. So again, after the personal allowance, the starter rate, 19%, increases to £2,827. The basic rate thresholds increase to £2,828 up to £14,921 at 20%. The starting point for the intermediate rate increases to £14,922 up to £31,092 charged at 21%. The higher, advanced and top rates and thresholds are unchanged. As before, you do not get a personal allowance if you earn over £125,140. There is a link in the handouts to rates and thresholds for employers for 2025 to 2026. And at this point now, we'll have our final polling question. And I'll launch that question on the screen for you now. And that question on the screen now is, the P9X provides information on updating employees' tax codes. Where can you find it? So please select one from, is it in a letter sent by HMRC, from information in the media, on the gov.uk website, or you don't know what the P9X is. And just a quick reminder for you, while we're waiting for you to complete the poll, reminder to save the question. So if you're on a mobile device, you will need to take screenshots, as you won't be able to save the question and answer log. Also, to download the handouts, and that you will receive a follow-up email, including a link to a recording of the webinar and useful links within the next couple of days. And we'll remind you of this information again near the end of the webinar. And then lastly, our colleagues in the background will aim to answer as many of your questions as they can today, but they may not be able to reply to them all. So thank you to everyone for taking part in the poll. I'm now going to close it and share the results with you. And those results are now shown on the screen. And just to confirm, the correct answer is that you'll find the P9X on the gov.uk website. So I'll just hide this information and continue. The P9X is an online help sheet. There is a link to the 2025 P9X in your handouts, or you can search on gov.uk. You should follow all the guidance on the P9X. For example, it explains you could receive individual tax code notices for some employees. It also reminds you how to view the new tax codes if you receive them online. So, what do you do for employees without individual tax code notices? The P9X asks you to copy authorized tax codes from 2024 to 2025 payroll and continue to use them for 2025 to 2026. For example, codes BR, SBR, D0, D1, D2, or NT. Usually, most codes need to be updated. You normally update any codes ending in L, M, or N by the amount shown on the P9X. However, for 2025 to 2026, there is no change to the standard tax code of 1257L and no requirement to uplift tax codes ending with L, M, or N. This is because the personal allowance has been frozen for 2025 to 2026. If any of your employees have week 1 or month 1 tax codes in the 2024 to 2025 tax year, you do not carry that over to the new tax year. Instead, for example, change 1257L W1 to 1257L. And at this point now, I'm going to hand over to Nicholas to continue with the next section. So good afternoon, Nicholas.
Good afternoon, Finette, and welcome to everybody that has joined us on the webinar today. We'll move on now to look at national insurance contributions. I'll say NICs for national insurance contributions and NI for national insurance. Let's start with the change to employers' NI as announced in the autumn budget. From 6th of April 2025, the secondary threshold, the point at which employers start to pay NI, reduces from £9,100 to £5,000 per year and from £175 to £96 per week. As the secondary threshold is now lower than the employer's lower earnings limit, the lower earnings limit is the point at which employees start to build up entitlement to contributory benefits. The secondary threshold will now be the point at which NI needs to be reported for PAYE purposes. The employee's lower earnings limit increases from £123 to £125 per week. This may mean that some employers may be liable to pay NI and report pay and deductions to HMRC for the first time. Employers will pay 15% on employees' earnings above £96 per week. This is an increase from 13.8%. Employees do not start to pay NI until they reach the primary threshold, which remains at £242 per week, and they pay 8% on the earnings above £242. The upper earnings limit for employees remains at £967 per week. Employees pay 2% on earnings above the upper earnings limit. The employer's upper secondary threshold in respect of employees under the age of 21, apprentices under the age of 25, and veterans stays at £967 per week. Please note that the NIC's relief for employers who hire former members of the UK Armed Forces has again been extended until 5th of April 2026. Although extended from April 2025 to April 2026, it is still only payable for the first 12 months of the veteran's first civilian employment. The Freeport upper secondary threshold remains at £481 per week. Employers operating in an investment zone are able to claim investment zone employers' NIC's relief through payroll. The 4 investment zone Class 1 NIC's category letters are N, standard, D, deferment, E, married women's reduced rate, and K, over state pension age. From April 2025, if you use an investment zone or Freeport NIC's category letter, you will have to complete a new employee workplace postcode data item on payroll and RTI. Married women born before 6th of April 1961 could choose to pay less NI until 1977, when the scheme ended. If your employee opted in before it ended, she can keep paying a reduced rate. You must check your employee's date of birth and gender are correct and that they're eligible to pay the reduced rate of NI before you submit a payroll submission. Check the details on any certificate of election provided by female employees. If she is entitled to pay at the reduced rate, make sure you use the correct NI category table letter. Most will use category B, but if you're claiming investment zone NI relief, it's E, Freeport NI relief, it's I, and if your employee is a mariner on a foreign going vessel, it's T. If your employee stops paying less NI, you'll need to change her category letter. Most will use A, or if you're claiming investment zone NI relief, it's N, Freeport NI relief, it's F, Veterans NIC's relief, it's V, and if your employee is a mariner on a foreign going vessel, it's R. You'll find this information in the February 2025 Employer Bulletin, and the links highlighted are included in the handouts. Eligible businesses can reduce their employer Class 1 NI bill every year by claiming Employment Allowance, EA. From April 2025, the amount you can claim increases from £5,000 to £10,500. From April 2025, EA will no longer be limited to employers whose secondary Class 1 national insurance liabilities were less than £100,000 in the previous tax year. This also means that state aid rules will no longer apply from 6th of April 2025. More employers will now be entitled to claim employment allowance. If you were eligible in the 2024 to 2025 tax year and your circumstances have not changed, you will continue to be eligible. You still need to claim the allowance each tax year because claims do not automatically roll over from the previous tax year. You cannot apply if you are a public body or if at any time during the tax year you are a public authority which is not a charity or a business whose activities wholly or mainly involve the performance of functions of a public nature. Where these functions are publicly funded can indicate functions of a public nature. However, funding alone is not the deciding factor, or a company with only one director and that director is the only employee liable for secondary Class 1 NICs. If you're not sure and want to find out more, you can check if you're eligible on the gov.uk website. There are links in the handouts to employment allowance, further guidance for employers, eligibility for employment allowance, further employer guidance. If you're using the basic PAYE tools, BPT, to run your payroll, it's important that you update and use version 25 from 6th of April 2025. This version will be released at the end of March 2025. It is also recommended that you should set the automatic update to yes. If you're a new customer and have registered for online PAYE, you can download the basic PAYE tools from gov.uk, where you'll also find help on installing this software. Your final full payment submission, FPS, up to and including 5th of April 2025, should be sent on or before your last payday of the tax year. If the Employer Payment Summary, EPS, is your last submission, then this needs to be sent on or before the 19th of April. Your last submission needs to include an indicator that it is the final submission for the tax year. This lets us know that you've sent us everything you expected to send for the whole PAYE scheme. If your payroll software does not let you put the indicator on an FPS, send your last FPS and then send an APS with the indicator ticked. You can also do this if you forget to put the indicator on your last FPS for the tax year. If your employees were in your employment on 5th of April 2025, you also need to give them a P60. You've got until 31st of May 2025 to do this. Let's move on to expenses and benefits reporting for employees for 2024 to 2025 and what's changing for 2025 to 2026. If you have up to 500 employees, you can use HMRC's PAYE online service to submit P11D, P11DB and P46 CAR. We have a recorded webinar submitting forms P11D and P11DB online to help you with this. The official rate of interest is used to calculate the income tax charge on the benefit of employment-related loans and the taxable benefit of some employer-provided living accommodation. If you provide employment-related loans or living accommodation to your employees, the official rate of interest for all of the 2024 to 2025 tax year is 2.25%. The government announced in the Autumn Budget 2024 that the previous public commitment made in January 2000 to not increase the rate during the tax year will no longer apply. From 6th of April 2025, the rate will be 3.75%. The rate will be reviewed quarterly and changes will take effect from 6th of April, 6th of July, 6th of October and 6th of January. If you provide employment-related loans or living accommodation to your employees, you'll need to check for future changes in the rate. Any changes will affect the taxable value of the benefits you provide. The car fuel benefit charge is the amount used to work out the charge. From 6th of April 2025, it increases from £27,800 to £28,200. Use this for company cars where private fuel is provided and the employee does not reimburse you fully for this. The van benefit charge increases from £3,960 to £4,020. This will apply to employees who have unrestricted private use of a company van. The van fuel benefit charge increases from £757 to £769. Use this where private fuel is provided and the employee does not reimburse you fully for this. Employees do not pay tax on the private use of a company van provided they have the van, mainly for business travel, and their private use is limited to journeys to and from home to their place of work, and their other private use is insignificant. Since 6th of April 2021, the van benefit charge has been zero for vans that produce zero carbon emissions. You can use advisory fuel rates to either pay company car users that amount per business mile travelled in the company car, or the company car user can pay you that amount per private mile travelled so that they are reimbursing the private fuel you've provided. The advisory fuel rates are reviewed quarterly on 1st of March, 1st of June, 1st of September, and 1st of December. The rates from 1st of March 2025 are shown on the following slides. There are three tables, one for petrol, and I'm just going to allow you a few moments to read the table on that slide. One for LPG, and again, I'll just allow you a few moments to read the table. And one for diesel, and again, I'll just allow you a few moments to read the table. Since 1st of December 2024, the advisory electric rate for fully electric cars has been 7 pence per mile. Electricity is not a fuel for car fuel benefit purposes. If a car has a CO2 emission figure of 1 to 50 grams per kilometre, you need to provide the car's zero emission mileage on the P11D form. This is the distance in miles that the car can be driven in electric mode without recharging the battery. The PAYE Online for Employer Service P11D has been updated with the changes. For paper P11D submissions, you'll need to ensure you complete the latest version, as historic copies may not include the new zero emission mileage field. These are available through your established method. It is also mandatory to provide the date a car is first registered. There is a new field to enter this information. If you cover the cost of additional household expenses for an employee who works from home, you don't have to report or pay anything if all the following apply. They need to work from home either because the equipment they need isn't available at your workplace, or their work means they must live too far away from your workplace to travel there every day. The amount you give them is no more than their additional household expenses, or the amount you give them is no more than the current weekly limit. Since 6th of April 2020, the weekly limit has been £6. That's £26 a month for monthly paid employees. You can deduct the tax due on benefits in kind through your payroll processes rather than through an employee's tax code. Did you register on or before the 5th of April 2024? You can only register for payrolling for full tax years and must complete the registration process on or before the 5th of April of the year before you start payrolling. Future years' benefits and expenses will be carried forward as payrolled automatically. If you registered for payrolling on or before the 5th of April 2024, you will have been deducting tax on benefits in kind through your payroll processing for the tax year 2024 to 2025. If you did, you won't need to complete a P11D for those benefits in kind. If you haven't registered, you'll need to submit P11Ds. If you haven't registered but want to payroll benefits for the 2025 to 2026 tax year, you need to register online on or before the 5th of April 2025. The Class 1A rate for the tax year 6th of April 2024 to 5th of April 2025 on expenses and benefits is 13.8%. From 6th of April 2025, the Class 1A rate increases to 15%. By 6th of July 2025, you need to submit a P11DB giving details of Class 1A due on benefits both payrolled and those included on a P11D. If you're not payrolling benefits, the deadline for reporting any expenses and benefits you provided in the 2024 to 2025 tax year is also 6th of July 2025. You need to pay the Class 1A due by 19th of July or 22nd of July if you're paying electronically. Your P11DB tells HMRC how much Class 1A NIC you need to pay on all the expenses and benefits you've provided. We need to make sure employees get the tax relief they're entitled to, and at the same time, ensure that we can identify where tax relief is not due. Since December 2024, individuals who wish to claim tax relief for employment expenses can submit their claim and supporting evidence using an online iForm. This will make sure the employee receives the refund they're entitled to. There's a link to guidance about supporting evidence to send in the handout. The form P87 is still available for those who wish to claim by post. And at this point of the webinar, I am now going to pass you back over to Vinette. Back to you, Vinette.
Thank you, Nicholas. We'll now move on to look at the new rates for the National Living Wage and National Minimum Wage from the 1st of April 2025. Following the recommendations of the Independent Low Pay Commission, the National Living Wage will increase from £11.44 to £12.21 from the 1st of April 2025. Since April 2024, the National Living Wage rate applies to workers aged 21 and over. National Minimum Wage will also increase as follows. The rate for those aged 18 to 20 from £8.60 to £10 per hour. The rate for those aged 16 to 17 from £6.40 to £7.55 per hour. And the rate for apprentices from £6.40 to £7.55 per hour. We're now moving on to look at changes to statutory payments from April, including the introduction of statutory neonatal care pay. We'll start with statutory payments for parents. The standard rate for statutory maternity pay, paternity pay, adoption pay, shared parental pay, statutory parental bereavement pay, and the new statutory neonatal care pay is £187.18. This rate applies from the 6th of April 2025. If SMP started before the 6th of April, change to the new standard rate from the 6th of April 2025. If 90% of their average weekly earnings is below, I'll repeat that. So if 90% of their average weekly earnings is lower than £187.18, pay 90% of the average weekly earnings. The government is introducing a new statutory entitlement to neonatal care leave and pay from the 6th of April 2025. This will be available to a broad range of parents, including adoptive parents, parents who are fostering to adopt, and the intended parents in surrogacy arrangements. It will provide employed parents whose babies are admitted to neonatal care with a day one employment right to take up 12 weeks of work, depending on the length of time their baby is in neonatal care. To qualify for 12 weeks of SNCP, they must also meet continuity of service and minimum earnings tests similar to those for SMP and SPP. The Neonatal Care Leave and Pay Act 2023 applies only to Great Britain. At the current time, no legislation to introduce neonatal care leave and pay has been introduced in Northern Ireland. Therefore, the measure will not apply in Northern Ireland. There is more information in the February 2025 Employers Bulletin, and more detailed guidance will follow shortly. A statutory neonatal care payment calculator will be included in the updated Basic PAYE Tools BPT. There is an online tool on gov.uk to help working families make the most of the shared parental leave and pay scheme. The tool provides guidance only, and you will still need to check that your employee meets the continuity of service test for shared parental leave and the continuity of service and minimum earnings test for statutory shared parental pay. From the 6th of April 2025, employers whose total Class 1 NI bill for the previous tax year was £45,000 or less can recover 100% of the statutory payment plus 8.5% compensation, Small Employers Relief or SER. This is an increase of 5.5% from the previous 3%. The general rate of recovery for all other employers remains at 92%. There is no upper limit on how much Class 1 NI they have paid, and Classes 1A and 1B should not be included. Finally, in this section, we'll look at statutory sick pay, or SSP for short. The rate for statutory sick pay increases to £118.75 per week. This rate applies to days of sickness from the 6th of April 2025. You cannot recover any of the SSP you pay to employees. Recovery only applies to statutory payments for parents. If you want to know more about statutory sick pay or statutory maternity pay and statutory paternity pay, we have these two webinars. Updated versions of these will be available live and recorded after the 6th of April 2025. This next section deals with the changes to the thresholds for student loans. We send student and postgraduate loan start notices either online or by post. You may get both types of notices. To reduce the risk of your employee paying too much, it's important that you check and use the correct start date shown on the notice and loan or plan type on the notice. You should continue to take deductions until we tell you to stop. From the 6th of April 2025, repayment thresholds for student loans are as follows. Plan 1 loans rise to £26,065. That's £2,172.08 per month, or £501.25 per week. Plan 2 loans remain at £28,470. That's £2,372.50 per month, or £547.50 per week. Plan 4 loans rise to £32,745. That's £2,728.75 per month, or £629.71 per week. Deductions for plans 1, 2 and 4 remain at 9% for any earnings above the respective thresholds. The repayment threshold for postgraduate loans remains at £21,000. That's £1,750 a month, or £403.84 a week. The deduction for postgraduate loans remains at 6% above the threshold. Before we move on to look at some other changes, let's have a quick reminder about the Employer Bulletin. A good way to stay up to date is to use Employer Bulletins. You'll find the Employer Bulletin on gov.uk. HMRC publishes the Employer Bulletin 6 times a year, giving employers and agents the latest information on topics and issues that may affect them. The bulletin is only available online. You can register for HMRC's Employer Email Alert Service to receive emails from HMRC, which tell you when the latest issue is available. This is the latest edition, February 2025, and some of its contents. And I'll just give you a few moments to read the information on the screen. Okay, moving on. So let's now look at a few other changes. The changes to Class 2 and Class 4 NI, introduced from April 2024, remain in place for the 2025 to 2026 tax year. Since the 6th of April 2024, self-employed people with profits above £12,570 are no longer required to pay Class 2 NICs. They will continue to have access to contributory benefits, including state pension. Those with profits between £6,845, the small profits threshold from the 6th of April 2025, and £12,570 will continue to have access to contributory benefits, including state pension, without paying NICs. Those with profits under £6,845 who choose to pay Class 2 voluntarily will continue to be able to do so. This increases from £3.45 to £3.50 weekly from the 6th of April 2025. There are no changes to the rates or thresholds for Class 4 NI, and I'll give you a few moments to read the information on the screen. We'll now move on to look at expanding cash basis. If you're a sole trader or partner, cash basis is the default way to work out your income and expenses for the tax year 2024 to 2025 onwards. This applies unless you either choose to use traditional accounting or cannot use cash basis. If either of these apply, you must opt out of cash basis by ticking the opt-out box when you file your self-assessment tax returns each year. There are changes to the cash basis from April 2024, which will make it easier for many businesses to use. The previous upper turnover limit and restrictions for loss-making businesses and for interest payments are removed from the 2024 to 2025 return due by the 31st of January 2026. These changes only apply to the cash basis for trading income. No changes are being made to the cash basis for property businesses. You may or may not already be aware that from April 2024, if you are self-employed or in a trading partnership, you must report your profits on a tax year basis. Although businesses remain free to choose their accounting date and prepare accounts to any date in the year, if they do not do this to a period between the 31st of March and the 5th of April, they will need to apportion profits from 2 accounting periods to the tax year. Accounting periods ending on the 31st of March will be treated as equivalent to those ending on the 5th of April for all businesses, including property businesses. For example, if the accounting period shown here as AP from the 1st of October to the 30th of September, you would need to apportion profits to match the tax year from the 6th of April to the 5th of April. Many businesses find it easier to prepare accounts to the 31st of March or the 5th of April from 2024 onwards. This may make completing the tax return simpler, as there will be no need to use 2 sets of accounts to complete each tax return. There are links to find out more about this in the handouts. And finally, we'll briefly mention VAT. Just to confirm, there are no changes to the VAT registration and deregistration thresholds since April 2024. So we are nearly at the end of the webinar now. Here is a summary of what we've covered today. So today we've looked at income tax, national insurance contributions and employment allowance, expenses and benefits for employees, national living and national minimum wage rates, statutory payments, student loans, and some other changes and updates. If you need more help, our full range of help and guidance can be viewed online from your mobile, tablet, or PC at any time. And links to further help and guidance are included in the handouts. Now, a reminder of how to save the question and answer log. And if you are using a PC or laptop and you'd like to save the questions and answers that have been shared in the question box today, select File and then Save Questions Log at the top of your control panel. You can also save the question and answers log from a Mac. On the GoToMeeting toolbar, select File and Save Questions. If using a mobile device or tablet, you need to take screenshots, as you're not able to download the question and answers log. The control panel will close at the end of the webinar, so if you want to download the handouts and the question and answers log and haven't yet, we will give you time to download these at the end of the webinar. I will leave the webinar open for around 5 minutes to allow you to do this. Just to remind you, we will also send you an email, including a link to a recording of the webinar and useful links within a couple of days. When the webinar has closed, you'll be directed to a short survey. Your feedback is very useful and helps us to keep developing our webinars. Please do not send in any more questions now, as these will not be answered in the 5 minutes that the webinar will be left open. So I'd just like to say thank you to everyone involved in today's webinar, and thank you to all of you who have attended. It will now go quiet for you to download the handouts and question log. So from myself, Nicholas, and the rest of the team, thank you and goodbye for now. Goodbye.